Hello everyone and welcome to TTT Markets. I am Fotis Papatheophanous and today we are going to discuss how losses quietly change your trading decisions. Most traders think losses affect their account, but in reality, losses affect something much deeper. They change how you see the market and how you make decisions. The problem is, this change doesn't happen suddenly. It happens quietly. And by the time you notice it, your behavior is already different. So in this video, we'll break down how losses change your decisions, how it shows up on the chart, and how to stay consistent through it. Consider this. After one loss, nothing dramatic happens. After 2 or 3, something starts to change. Not your strategy, but your perception. You begin to question valid setups. Focus more on risk than structure. You are looking for confirmation instead of clarity. So let's look all this on the chart. This is the dollar-yen chart, the 4-hour time frame, and as you can see, I have some of my favorite trading indicators. I have the VWAP, the bands, volume profile, moving averages, support resistance levels, trend lines, and so on. And I'm doing this to understand the structure of a market. Is it trending? Is it moving sideways? Where are all the important points to do business? And so on. In a neutral state, this is straightforward. So you do see the structure. For example, here, the market starts trending after a breakout from a base. You see the pullback, a clear level. You buy right at support. And you go ahead and you take the trade. You accept the risk. But consider one thing. Let's say you had 3 losses in a row. You see the same chart. Let me zoom out so you can see a little bit better. So the same chart, but you had 3 losses in a row. The same setup, but now your mindset is different. What happens? You hesitate. Let's say you had 3 losses. You see again the same setup. Would you just go ahead and take the trade? No. As we said, you hesitate. You think maybe this one fails too. So instead of executing clearly, you enter late. So instead of buying here as you should, you open there. Because hesitation doesn't feel like a mistake. This is important. It feels like caution. Remember this. Hesitation feels like caution. You are careful. You don't wish to make another mistake, so you are careful this time. But if you keep doing this over time, this is reducing your edge. So instead of buying here as you should, you buy there. And you keep doing it. So now your edge is smaller. So look at this. Ideal entry again was here. Why? Because we have the VWAP, we have the moving averages, we have trend line support. But let's say due to hesitation, entry happens later. Let's say you go and you buy here at the breakout of the high instead of the pullback over here at support. Let me do this so you can see better. So instead of buying here, you buy over there. What is the difference? Your stop is larger. Number 1. Your potential reward is smaller. The trade quality drops. The setup didn't change, it is exactly the same. But the execution did change because of what? Because of your hesitation. After losses, traders start filtering more. You want to be careful. You wish to be cautious because you want more confirmation, more indicators, more signals. It feels logical, right? But it creates a problem. You stop taking valid trades. Again, let's look at another typical example. Price drops, trend line, support level, and you hesitate. Everything aligns, but you are waiting one more confirmation, and then what happens? The price is moving without you. This reinforces frustration. You feel even more frustrated. And this leads to the next behavior. So after missing a few good trades, happens what? You are moving to weaker setups. You are starting trading impulsively. You are trying to catch up. You didn't execute as you should here. You miss the trade. You want to catch up. You wish to make back what you missed, what you didn't take. So you start looking for weaker setups. You are trading on an impulse. You are trying to catch up. And again, this is changing your edge. Let's look at a weak setup and you will see what I mean. Let's say over here, you don't have a clear structure. Momentum starts to weaken. Choppy price action, as you can see. Under normal conditions, you would say, no, I'm not doing business here because I don't have an edge. But after a few losses, it feels maybe good enough. So this is how performance deteriorates quietly. So here's the key concept. Losses create decision drift. Not big mistakes, but small changes. First, you have a slight hesitation. You overanalyze slightly. You start feeling impatient, just a little bit. Remember, small changes. Each one is small, but together they completely change your performance. They all add up because it is something it is hard to detect. This is why this is dangerous. You still feel you are following your plan. You are just being a little bit more cautious. But in reality, entries are different. Remember? Your risk is inconsistent. Your trade quality is lower, and the results start to decline. As we said, same market, different decisions, different outcome. That's the impact of losses. So again, imagine you should have gone long here, or you should have gone long here, but imagine going long a little bit higher. Doesn't this change completely your edge, your expected return? It completely changes the trade. So you might ask, what do professional traders do? Well, professionals don't eliminate losses. They have losses just like everyone else, but they manage their impact. So you do expect losing streaks, you do keep executing consistent, you avoid adjusting behavior emotionally, but most importantly, you measure performance over a series of trades. It doesn't matter if you lost one trade or two trades or three. What matters is to keep the same kind of behavior, and you know you have an edge, and this is going to reward you over a longer sample of trades. So as I said, you keep expecting some losses, but you keep your execution consistent and you avoid adjusting behavior emotionally. So a practical rule, what can you do practically? This is what you can apply. After 2 or 3 consecutive losses, you don't change your strategy. You change your awareness. You slow down. You double check. Is this the same setup? Am I executing the same way? No adjustments, just consistency. Let me zoom out so you can see something. So I'm zooming out. What do you see? Losses are part of the process. They do not define your performance, but it does affect how you respond to them, because over time, your results reflect your behavior, not your intentions. Losses don't just reduce your balance. They quietly change your decisions. They create hesitation. They increase doubt. They shift your execution. And that's how performance breaks down, quietly. If you want to improve your trading, focus not only on your strategy, but on how your behavior changes after losses. Because remember this, In trading, losses are unavoidable, but letting them change your decisions is optional.